So what if tomorrow there were no more auto loans and you had to buy a car? How would you be able to buy a car? Could you write a check for cash for the whole thing? Maybe you couldn't afford a new car. Maybe you just buy something that was used. Maybe you have to sell some of your assets, empty your 401k, maybe sell your comic book collection, whatever it is to get enough money to buy a car that you can get around from A to B. But what happens if you don't have any of that? You only have maybe $1,000 in your bank account. What kind of car could you get then? Now, I'm not saying that auto loans are going away anytime soon, but the auto loan crisis is a real thing and it's finally coming down. Now, I know I sound like a broken record. We've been talking about this for months on end, but there's a lot of things that happened over the last few days that really let me know that we're finally here to the end of the rope and something has to give. Now, I knew the government would prop up the automotive industry and kind of kick that can down the road, so it maybe went another year further than what I originally thought. But one thing that I didn't take into factor was the fact that people were still willing to overpay for cars, to pay crazy high interest rates, and to basically get themselves into debt with 60 to 84 month financing on cars that simply weren't worth it. Unfortunately, we had a lot of dumb consumers that were going out there buying cars that they simply couldn't afford. And I thought the banks would pull back on that, but they didn't. There was a lot of banks that are still underwriting really bad deals just to push the cars through. But I believe all of this stuff ends today. Now, I'm sure you guys have seen the stock market and people losing their minds, and they talk about liquidity crunch. Now, I kind of laugh when they say liquidity because unfortunately, most of Americans don't have a lot of cash. What they have is credit, which means they spent up all their credit and they can't buy anymore. Americans are basically taxed to the brink. Everything is absolutely insane. Rents have doubled, groceries have doubled, gas has doubled, your insurance has doubled. Everything seems to basically skyrocket in the last 4 years. Now, the only thing they can basically give is some sort of reset. Now, the government's done a good job of kicking the can down the road, and I know they're trying to say, oh, we want to have a soft landing. We don't want anything to fall and crash and the market to fall out. But all they're doing is basically propping up a market that's going to hurt even more when it finally crashes. Now, I'm not saying that the market's going to fall out and everything's going to drop to 50%, but I believe it's going to go back to what happened in 2008. Now, in 2008, during the Great Recession, it was extremely hard for banks to do lending. So they flat out decided they weren't going to do any lending at all. But in 2009 and 10, they realized that banks can't make any money unless they lend. So what did they do? They decided to lend money to people that didn't need it. Now, I know that sounds kind of silly, but it's a real thing. If you didn't have a 720 or higher credit score, you didn't have X amount of dollars in the bank, you didn't have maybe a 10% DTI, and you didn't have a previous track record of paid auto loans, you would not qualify for a new car. Now, I know that sounds kind of silly and it seems like it's redundant, like this is just normal auto loans. It's not. 90% of the people watching this right now probably couldn't afford to buy a brand new car. Now, one of the major things is the fact that they would not let you purchase a car for more than what you made 1 year annually. So if you make 40 grand a year, the max you can buy is a $35,000 to $40,000 car. That is it. But if you think about it nowadays, what kind of cars can you buy for under $30,000? What is if you're just a college kid getting out of school and you want to buy a cheap, affordable vehicle? You can't because technically you can't afford it. Along with DTI. Everybody has credit card debt, student loan debt. So even though you don't have a car payment and you make a decent amount of money, with your student loan and your credit card debt, you're already over your DTI, so you automatically declined for that car. Or they give you something really crazy like a $200 to $300 payment, which seems like it's okay until you find out the average interest rate for a used car is 12% and you can't go any further than maybe 60 months on that loan. And it really doesn't leave a whole lot to be desired. I think this is where we're going when it comes to this auto loan crisis, because at the end of the day, banks still have to lend money, but they only want to lend it to people that they know they can get it back. Now, what happens if you're outside of this numbers? You're not maybe 10% DTI or, your credit score is maybe a 650 or something like that. What happens to you? Well, unfortunately, more than likely, you're either not going to get a loan or you're going to get taxed incredibly high. What do I mean by tax? Is they're going to hit you with a massive down payment. And then on top of that, you're going to have an extremely high interest rate, maybe 15, 20, 25%. And this is what's happening right now. So every bank is basically looking at their paperwork and saying, you know what? This loan's not performing. How do we outrun this bad debt? They usually issue more loans to get more money on the books. But when you're trying to sell cars in a market where the prices are dropping, it's like catching a falling knife. I'm sure you guys have all heard that terminology. They need to sell more loans to basically outrun their bad loans to balance out their books. But if the book value keeps dropping and they keep doing loans, they're just digging themselves into a deeper hole. So how do they remedy this situation? Well, unfortunately, there's no remedy. They have to stop lending. They have to regroup, get rid of some of that bad auto loan portfolio, and start over again. I've seen some banks not lend for 2 to 3 years after the 2008 recession because they were so worried about losing money and they had to get their books in order. On top of that, a lot of these banks are backed by either hedge funds, maybe somebody's money, or some other type of government entity that will give these people cash to lend out to regular people. And if their auto loan portfolio is not performing, let's say they have a 13% threshold of people that can be delinquent, and they're sitting at 13.5 or 14%, that means that they don't get maybe a favorable rate. Maybe their next rate doubles or goes up a few points. So now they have to charge more money for auto loans. Or they get completely told that their performance is not good enough to re-up for the next quarter. So now they have no money to give out for loans for the next quarter until they can fix their books in-house. That's why you hear me talk a lot about banks selling auto loan portfolios. Sometimes it's better for them to batch a bunch of portfolios together, auto loans, and sell them off. So this way it hopefully drops their percentage points, maybe a half a point or a full point, and then they go back to lending because they're in their risk threshold. So I know it sounds kind of silly. I don't want to get too deep into the weeds, but all these things basically come down to the fact that banks are not making any money. I know you guys don't care, but at the end of the day, if banks are losing money, they're not going to lend. And that's where we're currently at right now. America has a liquidity crisis. Everybody was basically shopping on their credit cards, spending their savings account, thinking that everything was fine. This totally reminds me of 2008. I know a lot of younger people watch my channel, don't remember what it was like back then, but it was awful. Just like the news right now telling you the economy's fine, job numbers are fine, don't worry about it, the housing market's strong, nothing's wrong, everything is fine. Everybody kept telling us it was fine until it wasn't. And I swear to God, it feels just like this right now. The more people come on TV and tell us that we don't need to worry about anything, everything is fine, is absolute BS. I know it's the government propping everything up because they don't want to look bad. I know it's an election year, so people are worried about letting people know that how bad it really is. But I don't even have to say anything. I know people in the comment section are going to start chiming in saying that, they can't get approved for certain cars. The loans are getting harder. Some banks are freeing up, but other banks are pulling back. Why is that? So the reason why I have you guys comment in the section below is because you'll see certain areas like Nevada. Nevada has awful portfolio performance. So we're not getting any breaks. Where in Texas, your loans are performing a little bit better than most of the across the United States. So you guys will still get money probably lent in there. But eventually at the end of the day, it's all going to stop. So if you see somebody basically talking about how they're getting crazy loans done in certain states, you'll start to see a trend. It's usually like Georgia, Texas, what's one of the other ones? Ohio and the Midwest. Those are usually the last states to have really bad delinquencies where they pull back, but it is coming. And so I just want to let you guys know that this, like I said, this auto loan crisis is not a joke. This is something real. And the reason why it's going to affect everybody is because auto loans are the first thing to go. If you have a small, let's say, credit union or local bank, and they're doing a majority of your auto loans in your community, what do you think is going to happen when they lose hundreds of thousands of dollars in auto loans? Because the customers got repoed, they took them to the auction, they sold, lost tons of money, or nobody wants to do any more loans, so they're just basically stuck there with these crappy cars and they can't get rid of them. The bank can't lend. So if they've lost all this money, they can't put any more money into other programs like maybe small businesses. They maybe used to offer lines of credit for first-time business owners. They cut that off. Maybe they used to offer funding for, second mortgages in their area. Now they can't. They cannot have too much risk on their portfolio. Banks have to keep a certain threshold. That's why you see a lot of these small little banks getting bought up by bigger banks because they have so much commercial real estate debt that's putting them in a bad look, as well as bad auto loan debt. Once they get too much risk, they basically have to liquidate their assets to get some more capital in the bank so they can keep their books balanced, or they have to sell out to a bigger bank. And that's what you're seeing a lot happening right now. You can hear about it in the news, but they won't tell you it's a bad thing. They'll say it's a good thing. It's a merger. Everything is fine. The only reason they're doing that is because the bigger bank has enough assets to offset this bank's losses so they don't go bankrupt and you don't lose your money. So this is just a track record of showing exactly what happened in 2008. And the exact same thing is happening today. Now, I know it's not happening with houses, but it's happening with credit nonetheless. And so my advice to you is, if you're looking at buying a car, don't. Just wait. I know I sound stupid and it sounds horrible to just sit here and wait, but I'm telling you, the market is changing in a really bad way. I'm going to let out a video here probably next week to give you guys a little bit more insight. But what you just seen happen over this weekend, mark my words, you're going to see it rally just a little bit. Everybody's going to laugh and just think it's just a blimp on the radar until it pops again and it goes down even further. Like I said, I think the economy is just going to get worse. I finally had people talking about the recession word, because for some reason when I use recession here, everybody laughs and says we're not in a recession. It's not a real thing. This is the actual, description or definition of recession. We're in a recession. People can't afford stuff. You don't even have to ask me. Ask your neighbors. Look at yourself in the mirror. Can you truly afford your lifestyle? Can you afford to take your kids to Disneyland tomorrow? Can you afford to pay your bills? If you were to get sick tomorrow, could you afford to still pay your rent? If a lot of you people are saying no, or you'd have some trouble, then we are not in a good economy. Things are not going straight. And unfortunately, it's only going to get worse from here. Now, I hate to be the doom and gloom guy, so I'm going to end on some positive news. What could be more positive? The fact that their car values are going down even further. I know that's bad if you have a loan, but it's good because when you go to buy something new, the values will be a little bit cheaper. But once again, I still recommend don't buy anything. Please wait. I know you see a lot of these crazy lease offers from Tesla. They're dropping the rates down, I think, to 1.99 or something on a brand new Model 3 and Y. That's just to get you to buy it for full price. Don't do it. Wait, or buy a used one. But you're going to see a lot more people basically dangling the carrot, because they know once these banks start pulling their purse strings and stop lending, the money's going to dry up and nobody's going to do anything. So my advice to you, if you're a dealer, sell out of your inventory and then talk to your bankers and find out if they're changing any of their protocols or if they're going to stop lending on certain vehicles. Find out now, because banks have a bad reputation of not saying anything and just shutting off the next day. And it happens a lot when you're a dealer, especially if you're even a regular person looking at getting maybe a mortgage or a business loan. Talk to your bankers, because I promise you, if you let them know what you're thinking, I guarantee you they're going to reciprocate the exact same thing that I'm telling you right now. Is there's definitely a credit crunch going on. People don't have money, loans are not performing, and people are in a lot of debt. So all those things basically say that it's a really bad time, that they're not going to lend because there's too much risk in the market. But anyways, I'd love to know what you think about the actual auto loan crisis, and what are your thoughts of what happened over the weekend about the stock market actually taking a massive dip and people losing money as far as stocks. Was it gold, silver, even cryptos down? Everything across the board went down quite a bit. And if you're in Japan, unfortunately, that's the biggest hit you guys have seen since the 80s. But these are just telltale signs of what's happening. I'm not Nostradamus. I'm not going to go out here and say that I know everything. But, what is that? History never repeats itself, but it certainly does rhyme. And this does seem like the exact same cycle. I saw it in 2000. I saw it again in 2008. And like I said, here we are in 2024. I think the auto loan crisis is going to be a big deal, and it's going to be a hot talking point for a lot of these people, saying that people are taking advantage of from these auto loans. And what are they going to do? I guarantee you they're probably going to try to regulate them like they do mortgages. And if they do that, I can tell you right now, nobody in this video can probably afford to buy a brand new car, because they're going to put so many stupid restrictions that it's not going to be basically even worth it. Everyone's going to be buying used, beat up, cheap cars from China. So anyways, once again, thank you guys so much for watching. We got a great video coming out next week. See you then.